Okay, everybody, it's me, Gregory Mannarino. It is Sunday, October 25th, 2020, and this is my newest segment of Markets A Look Ahead. Two very big stories over the weekend on Friday and Saturday. I want to cover that. Some of this won't surprise you, but it is alarming. Actually, you know what? Let's start off with that. Bank of America is warning, okay, Bank of America is warning that the Federal Reserve is determined to create inflation via a digital dollar. Let's decipher that a little bit here. I've been explaining to you since like forever now that a new system, a new dollar is coming. I think, it's getting all kinds of coverage lately. Digital dollars coming, blah, blah, blah. But what does it really mean? Especially now that we have a major bank saying that the Federal Reserve is going to create inflation via a digital dollar. It should be obvious they're going to devalue the digital dollar relative to the dollar in its current state. You understand? I think overall, this is common knowledge. But when you have a major bank now coming out explaining what I think we all knew already, that's profound. So what are the ramifications of this? When this digital dollar is introduced, and it won't happen until there is a crisis of currency, a crisis of debt. Hold that thought too. What they're going to do is what they always do. Allow a crisis to manifest itself, get the people to panic, and then offer a solution. Their solution, which has already been predetermined. Okay, so this digital dollar, when it rears its ugly head, there are multiple facets to this. Number one, the truth is being revealed here. Okay, they're going to create inflation via the new dollar by substantially devaluing it. What are the effects of that immediately, let's say, to the market? Okay, stocks will rise and rise dramatically. Again, why? It takes more of these weaker digital dollars to buy anything, even shares of stock. So, Fed is determined to create inflation via the digital dollar. That's going to make your life much harder. Again, you're going to start to see more inflation than you're seeing already, although they're trying to convince us that there's no inflation. You've got to be kidding me. But again, this is the narrative. There's no inflation. So when they hit us with this digital dollar substantially weakened relative to the current dollar, again, they're going to still try to convince you that there's no inflation. It's unbelievable. But that's the environment we are in. Fakery, lies, and propaganda. So again, weaker dollar, very stock market positive. Very positive for multinational corporations that trade overseas. A weaker dollar relative to whatever other currency makes companies that are based here in the United States, corporations that trade overseas, well, it's very positive for them. And that's the mechanism here. That's all it is, to fleece the middle class. You'll lose all kinds of purchasing power. Meanwhile, these corporations are going to reap more profits than they're reaping already. We'll talk about that in a moment too. Look, this is getting grossly out of control. So anyway, weaker dollar is also massively positive for gold, silver, platinum, palladium, and yes, cryptocurrencies, which have done exceedingly well lately. And none of you should be surprised about that either. I've explained to you what's going to happen here to cryptocurrencies, what's happening to Bitcoin. Yesterday it was over 13,000. Right now it's just slightly below, but it's going much higher. Commodities are going to be the next bull market. I don't know another way to put that here. You have to understand, right now the environment is risk on, meaning cash is going into the stock market via suppressed rates, which are going to get even worse. We're going to talk about that in a moment too. So, at one point, what's going to happen? Risk on will become risk off. Markets run in cycles. That's what they do. when it becomes risk off, okay, right now is risk on, when it becomes risk off, in an environment of weakened digital dollars, commodities are going to explode. It should make sense to you. You understand? Very, very simple. Now, let's talk about another big story that came out over the weekend. The Federal Reserve is talking about a credit freeze or a debt freeze. What does this mean? First of all, I've been explaining this to you forever, that we have the potential of another credit freeze where everything locks up. Things just stop. The economy is just over. We're already in a declining economy. In fact, it's in free fall. We all know that. So the Federal Reserve is pointing specifically to the Treasury market. It's saying we could have a credit freeze in the Treasury market. Let's translate what that means. If the Federal Reserve, I want you to look all this stuff up too, okay? If the Federal Reserve is saying, okay, everybody, there's the potential of a credit freeze in the Treasury market, they're literally explaining to you they're about to buy a lot more debt. Now, again, this should not surprise you whatsoever because I've explained to you that we're going to see parabolic debt. The Federal Reserve will not allow, and they're preemptively setting this up, a freeze in the credit market. They are going to supply all the liquidity needed. And this plays right into this new weakened digital dollar. They are going to buy it all the debt. This is what they want to do. They're going to hyper liquefy the debt market, okay? Massively stock market positive, massively metals positive, massively cryptocurrencies positive. You understand? That's how it's going to play out as, again, they fulfill their end game to inflate, to be the lender, buyer of last resort, and to own it all. It's very, very simple. This is the mechanism that's going on. These are two tremendous stories that have come out over the weekend. And I want you to research this for yourself. I want you to think about the ramifications of this for yourself. Okay, so if we understand, we have Bank of America coming out saying the Federal Reserve is going to create inflation via the digital dollar. How do they do that? Well, they weaken it relative to the dollar we have now. How will that affect you? Think about it. Your everyday, day-to-day life, your purchasing power is going to go down the toilet. But again, how do you counteract this? It's always, action, reaction. You gotta bet against the debt. Become your own central bank. People, I don't know another guy out here who's been saying that in those terms ever. Okay, I started that over a decade ago. I hear other people talking about it, but I was the guy who literally said, okay, people, bet against the debt, become your own central bank. It should make sense to you. Now, Federal Reserve saying, hey, there could potentially be an issue in the debt market here with regard to liquidity. What are they saying? Expect mass debt expansion on an epic scale, like I've been warning about for months and months and years. So it's all coming together here. Do you see it? I hope you do. Let's move forward. Okay. This week, let's go back to last week. Last week we started this earnings season. Earnings have been coming in better than expected. Oh, can I see your shocked face? It's always the same story. Whether it's real or not real, whether these institutions are cooking the books or whatever, it's all fake. We all know that. This week is going to be even more epic than last week with regard to earnings. We're going to get a lot of tech this week. Now, tech is driving the market. Tech has been driving the markets for a very, very long time. It's going to continue that way. So, this is my expectation. Tech earnings are going to come in. I believe they're going to come in better than expected. This should be positive for the market, especially in the environment we are in. 10-year yield, 0.84, weaker, going to get a lot weaker once Wall Street digests the idea that a weaker dollar is coming in a digital form and that the Federal Reserve is now saying, hold on a minute, we're going to be buying more debt because there's a problem of liquidity in the credit market. Massively stock market positive. But what else is going on here? We have a deliberately dysfunctional government. Again, this is all by design. Stringing the middle class along, $1,200 check, which isn't really what it's about. It's about trillions in more debt for the market. Can I see your shocked face? It's all about parabolic debt, like I've explained to you. But this narrative is driving the market like a freaking yo-yo, and there's no doubt about it. So expect more talk with regard to, stimulus package, and we'll see how the market reacts to it, period, the end. And then, of course, we have this election here. You should expect volatility. Expect volatility in this market. But look, and that's all well and good. I've explained to you, we gotta, listen to the rhetoric out of Washington. It's just asinine. I don't know another way to put it here. What they're doing here to the American people. We have an economy in free fall with no end in sight. No end in sight. We're losing 800,000 people a week are applying for unemployment benefits for the first time. But meanwhile, they're telling us that we're adding jobs. You can't make this stuff up. You can't do it. It's all fake. Anyway, we know the data is fake. But again, looking at the bigger picture, it sets us up. We know exactly what we should be doing from every single angle. All right, if we understand the Federal Reserve is going to be issuing a digital dollar, devaluing it relative to the current dollar, what should you be doing? Exactly. Betting against the debt, becoming your own central bank. If we know the Federal Reserve is now saying, hey guys, we could have a liquidity crisis or a credit freeze in the debt market, what are they saying? We're going to buy it all. We're going to liquefy the debt market. How do you counter that? Bet against the debt. Become your own central bank. It all goes back to that. And it's very simple. You want to hold hard assets. You also want to hold cryptocurrencies in this environment. Period. With regard to trading this markets, it just couldn't be easier in my view, especially if you subscribe to my newsletter. I put everything out in there for you. I'm an open book. So again, there's another hint for you. Subscribe to my free newsletter. There's a link in the description of this video. And that's another thing real quick. On my website, traderschoice.net, there's free downloads all over the place. I hope you take advantage of this stuff. Just download everything. It's free. All right, look, I think this video has been very, very important, especially in light of what we just found out with regard to Bank of America saying, hey, Federal Reserve is going to create inflation via their digital dollar. You know what they're saying. I covered it already in this video. Listen to the video again if you missed it. With regard to the debt market, Federal Reserve warning of a credit freeze. Well, guess what they're going to do? They're going to flood the world with more debt. Period. This is it. Everything I've explained to you since I don't know how long is happening now, right now. So this should be a wake-up call to you. Start, if you haven't already, or if you're new to this, start thinking about ways that you can get yourself on the right side of it, of what's coming down the pike. Because again, what we're seeing here, there's no way to stop it unless another major force acts against it. I've covered this recently. If you think about a force moving in one direction, let's say an aircraft carrier moving in one direction, this massive thing moving through the ocean, let's say, wide open throttle. It's very hard to stop it from moving unless a major force acts against it. You understand? Or a train, whatever it might be. You need a major force to act against it. Otherwise, things will continue in that direction. It should be very simple to understand. All right, look, kind of a long video, but a very important video. I want you to ponder these things. I want you to look up what I said here with regard to Bank of America warning about the digital dollar, with regard to the Federal Reserve talking about a liquidity issue or a credit freeze in the debt market. Ponder what these things mean, because I've laid it out for you, I think, in a very simple way to understand. Talk about these things. Start getting people to realize the environment we are in. People, it's unique. We've never seen anything like this. Do you think it's a coincidence, real quick, before I let you go, that we have this merger occurring now between these corporate entities and this new American government? Meanwhile, all this is taking place around us. It's orchestrated. Every single thing has been thought out before. Don't believe a thing is by accident. It's all by design. And who's losing here? On an epic scale? Well, you know who's losing here. The middle class, the well-off and the rich could not possibly be doing better right now. Wall Street, we're near record highs, and we're going to hit record highs again real soon, despite the fact that our economy is in free fall. Wall Street is expecting their largest bonuses on record. Think about that. While our economy is dying, while the middle class is being exterminated. This should all make sense to you. I really hope it does, because if it doesn't, at this point, you're in a lot of trouble. All right, I'm out of here. This guy loves you. Please share the video. Maybe watch it twice. Take this stuff in, because I covered a lot of stuff. And I will see you in the morning. That's it.